Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial and please make sure you are aware of all your risks prior to placing any trades. Also note that the trades in this presentation are hypothetical computer simulated trades and or results. They're believed to be as accurately represented as possible. Keep in mind that live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke from Locke in Your Success LLC, where I am a trading performance, wealth, and success coach. And myself and my team of mentors here at Locke in Your Success are here to help you win in the markets and in life as well. And today we are going to take you into the realm of high probability options trading. High probability options trading is where we utilize option strategies to make money from the passage of time rather than depending solely on price movement in order to be profitable. This means we can often make money whether the price goes up, down, or sideways. Now this doesn't mean we're going to win all the time, but it does mean we have a much higher likelihood or probability of winning than someone who's, say, taking a directional bet on the market. And the strategy that I would love to share with you today is known as the quick and dirty broken wing butterfly strategy. Now, the quick and dirty broken wing butterfly strategy is a trading strategy that we teach in our what we call our FIT program, or our Fundamentals of Investing and Trading library, which is included for free with our Go membership. This strategy is relatively simple. It's a market neutral income strategy that we trade on the Russell 2000. It requires a minimum of $3,500 per trade. The example size we're going to be showing you today is a $7,000 planned capital trade. And with that trade, we're going to have a profit target generally of $500. But what I like to do with this particular strategy most of the time is I like to bring it right into about 10 days to expiration, even if we're up over our profit target. That part of it can get a little bit subjective from time to time, but I do like to do that. And the exit loss trigger in the strategy is 7.1% of our planned capital. Okay, so let's take a look at the strategy. And this is a strategy that's, again, relatively simple, and I came up with it relatively quickly to teach broken wing butterfly strategies, again, within the FIT program. But I really love this strategy. It's very dynamic. It does well in a lot of different types of market conditions. And a lot of the challenges some people have had this particular year, 2022 has been a little bit tougher for a lot of types of trading to make money. Quick and dirty broken wing butterfly still doing tremendously well in 2022. So let's take a look at the strategy. So if you're new to us, this is an analytical software known as OptionNet Explorer. And this software, what it does is it shows you the risk profile of your position. So we have a graph over here on the right side. The asset price on this graph is along the bottom, so it's a little bit different than a price chart. Our profit and loss is on the right side in the vertical fashion here. We have something called a T+0 line, which is this curved line that goes from red to blue to green. And this line here is a representation of our position's value, or what the software expects our position's value to be as of today at any given price point of the Russell 2000. Then we have this sharp edged line here, which is known as our expiration graph. And that is the value of the position at any given price level of the Russell 2000, if we get to the point where the options expire and we don't make any position movements. Now, looking at this at face value, should the market stay in between the tent, we make money. We go outside the tent, we have a small bit of risk here, and we have majority of our risks towards the downside. This configuration is known as a broken wing butterfly. It's made up from options, and we are currently in the November 4th, 2022 options. We are 42 days to expiration. We have short strikes. These are all in puts. We have short strikes of 1650. This is our put strikes down here at the bottom. So we're short 4 1650 puts. We're long 2 1690 puts, and we're long 2 1600 puts. Again, that configuration is known as a broken wing butterfly. In this case, we have a 50-point wing to the bottom, a 40-point wing to the top, And it's known as a two-lot because it's a 242, and that's known as two broken wing butterflies. Now, this strategy is typically entered 56 days to expiration, and we'll typically gauge that by the monthly cycle. So our monthly cycle, this November 4th happens to be a weekly. Our monthly cycle is actually 56 days to expiration. That is our entry point for this strategy. We are trading this strategy completely non-subjectively, meaning we're not looking at charts, we're not looking at implied volatility, we're not looking at the news. We are coming in 56 days to expiration, we're going into the position. Now, I like this example because we have something unusual that happened during this example, and this does happen from time to time, but we come in and we want to enter our position 56 days to expiration. The way we enter it is we go about 20 points under the money, so the money is 1676. About 20 points under that is 1650. Then we do a 50-point wing. That's going to be 1600, and then we do a 40-point wing to the upside, and then we make a delta correction if necessary. But we do the 40-point wing to the upside, and notice that we do not have the options available to us. This is kind of rare, but it did happen for a couple of cycles actually this year in 2022. For whatever reason, they were not offering us the options. So we still want to get in the trade. So what I'm going to look for is I'm going to look for the nearest cycle here that is fairly close to 56 days to expiration, and we have our 42-day to expiration cycle. So since we don't have options available here as of this point at 56, we're going to jump into 42 days to expiration. We're going to set up our broken wing butterfly here. We're going to check our delta, make sure it's within our limits. So what we're using here for limits on a position this size is +5 and -3 for a position this size for delta limits. Now, delta is essentially the slope of this line. So if the slope of this line gets too steep in either direction, we're going to make an adjustment to essentially flatten it out a little bit. And if the market moves too far to the downside, we'll end up rolling back. If the market moves too far to the upside, we just kind of take off risk as we go along. And we do that according to the delta guidelines that we've set out for you. Now, this is a bit of a modified trade because we're entering it in a different expiration cycle. Our plan here is, with this trade in general, what we do is we exit this when it gets 10 days to expiration, or if you want to use the profit target, you can use $500 as a general gauge as a good time to get out of it. If you don't want to do that, you can usually trade these into expiration. So I guess I should say, generally I'm going to trade these into expiration if the position is relatively safe. Depending on how we're positioned at 10 days to expiration, we may choose to stay in, regardless of what our profit number is, assuming we're not drawn down too much. And if this draws down $500 in P&L, we're going to want to exit the trade. So that's essentially how this goes. And let's get going here. What I'll do is I'm just going to jump ahead like 5 days. And by the way, it was entered September 23rd, and now it's September 26th because we went over the weekend. And this shows us our date. So I'm going to jump ahead to the 29th. Basically what's happened is the market's moving around quite a bit. We actually had a fairly big down move. We're getting a lot of chop back and forth, but we're not really making any profit and loss progress just yet. But as time goes by, as we get closer to expiration, should we be in this area, then we will do quite well. So let's move forward here. Another 4 or 5 days. And boy, the market really took off there. So let's take a look, see here. Here we are, October 4th. This cycle is now 31 days to expiration. The market's gone up quite a bit, and we got a pop in our T+0 line. We're up $142. We are a delta of just about 0 here, and this is what our position looks like. Let's push this forward several more days here. kind of see how the position reacts to the back and forth price movement as we go back and forth. We're up $202. We're now 22 days to expiration. It's October 13th. We haven't had to make any sort of movements or adjustments on the position, so it's generally going pretty well here. See, we're swinging around. We're up 342 now. We're 17 days to expiration. Remember, we're looking for like 10 days to expiration to consider doing an exit here. We're up 402. 482. Now we get a big up move. We're up 412. We're 14 days to expiration here. That was close to a profit target number. Okay, so here, this is what's happening here. So we are now November 4th. We're 11 days to expiration in this cycle. Remember, we're kind of monitoring it off of this cycle here, which is now our monthly cycle, which is now 25 days to expiration. I'm still okay staying in this cycle here because until 10 days to expiration, I will make a minor adjustment to deal with this. Remember, we said our maximum negative delta was 3, and it is 3, so we're going to bring this down, flatten this out a little bit, and that is going to be our adjustment. Okay, so if we uncheck ignore trades, you can see that that adjustment was made. Our capital in the trade now, by the way, is about $2,800. So we have a planned capital of $7,000, but we have an actual capital of $2,800. That's not uncommon. And if you run with the actual capital numbers, typically you'll make much more than what our percentage is because we're disclosing our percentages off of planned capital, not actual capital in the trade. So we're up 430. That's looking okay. If I go to, let me just ignore the trade for a sec. I go to the following day. We end up getting a 50-point up move in the asset, and we're up $415. And this here is now 10 days to expiration. So what I'm going to do is I'm going to close this. And since I have to close the position anyway and move it into the next cycle, I'm going to reposition this to starting position. And this is most of the time what we're going to do if we're in one of these modified entry situations, which again is sort of abnormal. So I'm going to close out this broken wing butterfly here, and we'll do it in 2 orders, right? We have a broken wing butterfly with long strikes of 1680 and 1600, and then we have one with long strikes of 1690 and 1600. We'll put those in 2 different orders, close it down, and we'll jump over into our normal monthly cycle to trade out the next 14 days. So if I do that, that's going to look something like this. I closed that out. I came here. Entry position would be about 20 points under the money. That's 1780. 50-point lower wing, 1, 2, 3, 4, 5. 40-point upper wing, 1, 2, 3, 4. Check our delta, make sure we are within parameters, and we are. And that is our new position. That's what it looks like on our analytical graph. So if I go forward here, 3 or 4 days. At this point here, it's October 28th. We're 21 days to expiration. We are at a profit target number. But this is what I mean by whether we're well positioned or not. We are fantastically positioned in here. We have a lot of downside room. We have a lot of upside room. We're not in a high gamma situation where a move either way is going to make this drastic drawdown in the position. So that being the case, generally I like to stay in these. So if we do stay in it, and we will run this, say 3 or 4 more days. Of course, if we started to get into trouble, we would just exit out. But again, we had a 55-point down move, but we are still within delta guidelines. There's really no issue here. We go Thursday. We're now 15 days to expiration. We essentially have 5 days left in the trade. Let's just jump ahead a few days here. That's what we look like on the 7th. And if we go 1 more day to the 8th, you'll notice that we are now 10 days to expiration in our monthly cycle, and that is our exit date. Meaning that we're going to exit this trade with a profit after commissions that's going to come out to $961 in only 46 days. And that is a fantastic example of our quick and dirty broker wing butterfly, this episode's winning trade. If you love what you see, I would encourage you to come on over to lockeinyoursuccess.com. That's LOCKE in yoursuccess.com, where you can learn the quick and dirty broker wing butterfly by simply joining our Go membership. Also, where you can gain access to our options trading for income webinars that we do every Monday morning, and we have over 900 episodes where we track 12 different powerful non-subjective trading strategies as they go through the marketplace in real time. It's a fantastic learning experience, and if you're interested at all in becoming a trader, this is a fantastic path to take. So I encourage you to come on over there, check out our Go membership, and of course, if you're at the higher level, check out our Pro membership, where we learn to subjectively modify our already very powerful, very high probability income strategies to make more money more consistently than you may have ever thought possible. Also, make sure you check out thewinningtrade.com. That's thewinningtrade.com. You can check out past winning trades and see what's coming up for upcoming winning trades, and also gain access to free bonus material. And while you're there, be sure to check out our free trading performance podcast, where you can learn to skyrocket your trading results regardless of the type of trading you do. If you have any questions, comments, or anything else you'd like to see in the next winning trade, please put that in the comments below, and I'll make sure I answer your comments for you personally. Thank you for joining me. I look forward to seeing you on the next winning trade.